Hello, everyone. Thanks for tuning in to Market Talk. Today is Wednesday, May 8th, and I'm Mike Pearson, sitting in this week for Jesse Allen. We've got a big show coming today. If I do say so myself, we're going to have a conversation with Mr. Darin Newsom of Bar Chart here in just a moment. And then in segment 2, we're going to talk with Dr. Daryl Peel about his impressions of the cattle market, what to expect here as this herd rolls into summer. And then finally, we're going to talk with Mike Zuzolo before the end of the show. But let's jump into it. Darin Newsom joins us now. And Darin, I want to get us outside the world of agriculture. I want us to talk briefly about what's happening in the world of interest rates, inflation, and metals. Gold's at a record high, or has been at a record high. Where do you think this goes from here?
Yeah, fundamentally, there's really no reason for corn. Here we go, for gold to break down. But from a technical point of view, it looks like there's still some downside. So this kind of feeds into the whole argument that we've heard this week, for a couple weeks now. Basically, well, excuse me, for a week now since the last FOMC meeting. We've heard, okay, rate hikes probably aren't going to happen. Cuts they're not sure when cuts are going to be made, but certainly looking at the Fed fund futures forward curve, always fun to say, it's still indicating that either in the July or September meetings when we should see the first cut. But then all of a sudden we start getting headlines, some chatter from some of the governors talking about we can still see a rate hike. Now, the market doesn't agree with that, but if it happens, then we're going to see the dollar firm again. Dollar's still in a long-term uptrend on its monthly chart. And I think this is what's going to kick the gold down for that next move. It's still got $50 under it till it hits its technical target. And something's going to have to happen. If it's going to fulfill that, something's got to happen to get it there.
Okay. All right. So if we do see this rate hike conversation intensify, that would be bearish gold because it would be an indication that, we're taking strides to address inflation. But Darin, I mean, we have seen a total 180-degree flip in how investors were expecting this year. As you mentioned, we expected rate cuts, coming along roundabout now. They're not happening. It sounds like it's going to be 5.25% for the foreseeable future. How does that change managed money's approach to the commodity markets? Do we come back into favor?
That's going to be an interesting thing to watch. As we look at the equities, they had a sluggish April, but then they've come right back here in early May. And so the idea that some of the money might come out of equities and over into commodities seems to be pushed aside. Now, again, I just wrote a piece for Bar Chart. Is there going to be a commodity that could catch fire? And it's going to come down to fundamentals. Right now, cocoa is still that hot market. It's rallied almost 30% off last Friday's low. Another one to keep an eye on is soybean meal. But, for the corn, soybeans, we have to see markets that have, bullish real fundamentals. And I'm talking about forward curves. I'm talking about basis, these sorts of things to get investors interested. And that's what we see with cocoa. That's what we see with bean meal. Right now, I don't really see it creating a large flow of money into commodities. And what we are seeing actually is liquidation of both long and short futures in the CFTC commitment to traders reports, which I find interesting because it just means more money continues to go over into equities.
Yeah, no, that seems counterintuitive in this time. You mentioned soybean meal might have a setup that could attract these investors. I know you were speaking of an inverse on social media last night, early this morning. Was it in bean meal you see the inverse developing?
The soybean meal already has an inverse.
Okay.
So, I mean, it's already there. And I think that's what's really supporting soybeans. But the one that had my attention, and it comes with an automatic asterisk, is the July-August soybean future spread moved into an inverse here this week. And, I say it's an asterisk because it includes the August contract. It's almost absolutely meaningless. The September is absolutely meaningless. So it's hard to get a good gauge on it. But if we take it at face value and we see that the July-August is inverted, then it tells us, there's a little bit of a push here in supply and demand. Commercial side's paying a bit of attention to possibly a tightening situation. It's not as bullish as bean meal, but if investors are wanting to get into a bigger market, they may look at that and say, we could go into soybeans at least short term.
All right. And now that we're back here, I'm pulling us back into the ag commodities, Darin, because you got me thinking here about soybeans. If we do start to pull those buyers back in, if this does start to catch, is there an upside target you'd be watching as the next major level of resistance, or are we kind of in uncharted territory here?
It's not uncharted. We have to fight through a lot of the old trash that we left going down. So, I think it's going to be a bit of a struggle because it's not like it's not like we have a tight situation. If we look at the cash index, national cash index at the end of each month or at the end of each day, whenever you want to look at it, we see the available stocks to use, real supply and demand, available stocks to use are not that tight. In fact, it's much looser situation than what we've seen over the past number of years. So, we have to see a dramatic change in the global market, I think, to really get investors interested, to really start to build on this market. Now, that being said, July rallied 80 some cents from Tuesday to Tuesday. So, what we've got is a vacuum situation where everyone who's wanted to sell has sold. And so really all that's left out there is either some short covering or some new buying. And if there's no sellers on top, that leaves the possibility open to what we've seen this past week.
There's the explosion higher as the bids go searching.
Right.
That's what we saw. All right. Lots to happen here. Darin, I do want to bring us back to the metals because, of course, that isn't just a measure of inflation. It's a measure of global growth. It's a measure of construction and all this sort of stuff. And copper continues to push higher. I know it's been kind of stable here for a month or so. Is this a fundamental factor? Are we seeing crazy building happening somewhere that's driving up copper, or is this an inflation play?
Copper is interesting in that, its nickname is Dr. Copper because supposedly it has a doctorate in economics as an economic indicator. So to me, gold is the inflation play, silver's caught in the middle, and copper is actually an economic indicator. And what's interesting to me is that copper is continuing to do well. And everyone wants to, everything's so bad, hand wringing, gnashing of teeth and all of this economically around the world, everything's falling apart. Copper still seems to be going up. US, not just U.S. stock markets, but global indexes are going up as well. And I know stock indexes are not the economy, but there's still plenty of money being moving around. There doesn't seem to be as much fear as everybody wants to talk about. And something like copper continuing to push higher, continuing to find investment, continuing to find fundamental buying, I think to me that's an important read.
All right, Darin, as you take a look at the environment right now outside of agriculture, again, looking at the broader commodities, looking at the equities, at bonds, is there a place right now that you think farmers who are still, having some pretty solid returns on the farm, where do you think we ought to be looking to diversify some investments or even as a speculative play? Anything fun out there right now?
Anything fun? Well, you can always get into natural gas because that's a quick way of getting in and out of fun in a big hurry. You mentioned bonds. They've been hinting at a long-term uptrend for quite some time. Now they really haven't been able to follow through, and I think they're into something like a 6 or 7 months downswing at this point on their monthly chart. But as long as they don't take out that previous low, Treasury bonds still look like they could be a play down here. And if we go in with the idea that over the next year and a half, we're going to see interest rate decreases, interest rate cuts, then bonds could be a good play.
Okay. All right. Because the price of bonds rise as interest rates come down. Is that right? They're inverse one another?
Yes. Bond prices go up, yields come down as interest rates come down.
Lots to watch here, folks. This economy continues to change, continue to try and make sense of what direction it's heading for our bottom lines. To do that, Darin Newsom, we always appreciate your insight. Thanks so much for joining us here today.
I really appreciate you having me on again, Mike.
Folks, stay with us. We'll be back with more market talk after this.